Today's explanation is about a fascinating concept: the stock market in guerrilla economics. Let's start with a big banana company, such as Banana King Corporation. They need capital to expand their farms. Instead of borrowing from a bank, they decide to divide company ownership into small parts called shares. A share is a type of security. It represents your ownership in that company. When you buy a share, you become a shareholder, a small owner of Banana King Corporation. The second type of security is a bond. A bond means you lend money to a company or the guerrilla government. In short, securities are financial assets that can be traded, representing ownership, stocks, or debt, bonds. The stock market is where these stocks and bonds are traded, like a banana market, but with papers. Trades happen through exchanges, like the Banana Stock Exchange, New York, or via brokers. The main purpose: help companies raise capital and help guerrilla investors make profits. When Banana King Corp does well and earns profits, they can share part of that profit with shareholders, called dividends. Stock prices rise when more guerrillas want to buy than sell. That's called supply and demand. Conversely, if the company struggles, the stock price falls. Meaning, stocks help companies expand without taking on debt. For investors, it offers capital growth and passive income through dividends. Common stocks give you voting rights at company meetings. Preferred stocks usually don't allow voting but receive dividends first. Investing in stocks requires analyzing the company's financial health and future prospects. Buying stocks means accepting risk. You could lose money if the company fails. Now, for bonds, a loan. The company, or government, promises to repay the principal after a set time. In return, they pay you regular interest, called a coupon payment. Bonds are less risky than stocks because they are debts that must be repaid first. Bonds can be short-term, months, or long-term, decades. Meaning, bonds help companies and governments raise capital without giving up ownership. For investors, they provide stable income and preserve capital. Credit rating shows how risky a bond is. The higher the rating, the safer it is. When interest rates in the guerrilla economy rise, existing bond prices fall, and vice versa. Government bonds are the safest, almost no risk of default. Corporate bonds offer higher returns but come with higher default risk. Want to trade securities? You need a brokerage account at a guerrilla brokerage firm. Your buy/sell order goes to the exchange to be matched with another seller/buyer. Guerrilla investors can invest directly, buying stocks, or through mutual funds. A mutual fund is a basket of securities managed by a professional fund manager guerrilla. Passive investing in index funds is also common, simple, and low cost. Your portfolio is the collection of all securities you own. Key principle: diversify. Don't put all your bananas in one basket. Value investing means finding good companies that are undervalued by the market. Growth investing focuses on companies growing fast. Tracking economic news and company reports is vital for success. The stock market isn't a casino. It's a tool for capital allocation in the economy. Importance: it helps businesses expand, create jobs, and drive growth. It also helps individual guerrillas beat inflation and build wealth over time. Risk level: stocks are riskier but offer higher potential returns than bonds. IPO, initial public offering: when a banana company sells shares to the public for the first time. A bear market is when prices fall sharply and stay low. A bull market is when prices rise strongly over a long period. Remember, only invest money you're willing to lose and don't follow the herd emotionally. Think of the stock market as a jungle, full of opportunities but also dangers. Wishing all our guerrilla investors success. Keep learning and conquer the banana market.